Welcome to another episode of the Revenue Lab. I'm here with Robert Gimbel. Hey, Robert, how are you doing?
Hey, Yanis, thanks for having me. I'm doing very well.
Great, yeah. So really excited to talk to you about your journey at Camunda. You joined as the first employee and spent essentially 14 years together with the founders building the business in various different roles. And we're gonna talk about how you build a scalable and especially predictable revenue engine. And yeah, I mean maybe share what you're doing right now and who you are. But I'm really excited about diving in because there's so much wealth of experience here.
Yeah, thanks. I can briefly introduce myself, but let's not spend the majority of the time there. So I'm Robert. As you said, I've spent a lot of time at Camunda in various different roles. I was responsible for the product and engineering organization initially when we launched the product, helped to build that up to a size of 30 employees in that org at the time. Did a little bit on the admin side of the firm afterwards before transitioning into the CRO role. That was at a time when the business had already proven itself in the market. 10 million revenue of ARR exceeded. And basically, it was my mission to build an org and a revenue engine that could get the company to 100 million. And that mission in terms of the org was accomplished last year. That's why I transitioned out, and now I'm working as a go-to-market advisor, helping various different firms to go through similar journeys.
Fantastic. So I found a quote from Jacob Freund, who's the CEO of Camunda, and what he said about you is like, if I want to point out one key strength about Robert, would be his unique ability to build and operate scalable structures, and the degree of stability, predictability, and efficiency is outstanding. So the bar is really high for this, just so you know. No, but I love this because I think it follows the theme, of what we have in mind when building revenue organizations. Maybe for context, like tell us a bit about Camunda, the go-to-market motion, and kind of the ASP sales cycles to set the scene, and then we'll dive into predictability.
Yes. So, in a nutshell, Camunda is a technology product, a platform that allows you to orchestrate processes end to end. It's sold into the IT, and they take it to then build custom applications with it. And that can be all sorts of applications. To give a few examples, it could be customer onboarding for a bank, it could be claims settling for an insurance, it could be network provisioning for a telco, and all that kind of stuff. And they take the basically the essence of the workflow engine and the platform around it to basically accelerate them building such solutions, orchestrating various different endpoints across systems and devices and humans. That's complex, right? Like that's core business for these large enterprises. The bigger an organization is, the higher the value, the higher the complexity of their existing IT landscape. So that was who we would generally target with the solution that naturally transitions into a complex consultative sales with longer sales cycles, 6 to 18 months. We saw anything even longer, very few instances of it being shorter, but generally the deals we closed would fall into that. The ASPs would be in line with that, ranging from yeah, 5 to 6 digit ARR numbers initially and then growing over time.
Yeah, yeah,
And
and
maybe important, the company is very developer focused. Some of their technology is open source, so we would always have open source components that we would distribute for free, and then we would commercialize on top of that with an enterprise offering.
yeah. And so obviously, if you have an open source, approach to the go-to-market, I understand. Like, can you describe how was your pipeline generated? Yeah.
That obviously matured over time, but initially it was you could refer to it even as product-led growth, in the
Mm-hmm.
sense that we would give out the product for free in the
Mm-hmm.
form of an open source project, and people were able to play around with it, mainly software developers and probably software architects or enterprise architects, and they would build proof of concepts with it, and thereby considering to integrate it into critical projects. And whenever that happened, there was the possibility that they would turn to us and ask for commercial vendor-backed relationship, including support and maintenance, and later on add-on features. So from a pure demand generation perspective, that drove a lot of inbound in the early days. I think
Mm-hmm.
all the way to the 10 million and even beyond, it was almost exclusively inbound driven.
Mm-hmm.
So
Mm-hmm.
people surfacing to us, they're like, hey, I've used your product. I want to integrate it into my project. I now need a price for your enterprise edition.
Mm-hmm.
And later on, we added partners to that. We also added an outbound element to it. And we also sourced through our own customer success teams quite a significant amount of pipeline.
And that this was then mostly expansion opportunities.
Exclusively expansion, yes.
Yeah. Yeah. Okay. Okay. And if
Why?
you think of,
Because the technology, we refer to it as horizontal, right? We weren't focused on just one use case, and once you did that, you were done. But you could adopt it for for a variety of different use cases. So if we entered a big organization like a large insurance company or a large bank, we would typically land with one or two projects and then expand that over time, going from like to multiple other areas of their business where we could also create value for them.
yeah, so up to 10 million, one go-to-market motion, mostly inbound, open source. What were your criteria to open an opportunity?
Um, so first of all, most important was consistency to me. That was a big thing, right? Like that's when everything started. You typically have a lot of noise further up the funnel, right? Not that you shouldn't track metrics and all of that, but as soon as you convert that into pipeline, I always refer to it in front of sales like that's the moment you let everyone else on the off the hook, right?
Hmm.
That's when you
Hmm.
say this is good enough for me to take ownership and yeah, convert it at a reasonable rate into actual business and revenue. So that was a critical milestone to reach. And we had clearly defined criteria. It was inspired by BANT,
Hmm.
classical good old BANT with small variations to it. And the biggest focus was on the need of the customer. What
Hmm.
was there a problem with a customer that was really relevant to them, and it was a priority for them to solve it, and did it relate to our enterprise edition as a solution, right? Like I always say, you want to find these two elements: something that's really relevant to them and that you are able to actually solve with what you have on offer. And if that's strong enough, typically these other elements like budget and like hierarchies and meeting important people like economic bias and so on, they can get resolved. But if you don't have a strong need, you can even have all that other stuff and a good timeline. It's just likely to fall apart later on if you don't
Yeah.
have a strong enough reason for them to make a move.
Yeah. And how did you get in touch with them? I mean, they download the product, they love to, just basically try it out. I mean, how do you know those criteria exist?
Yes, first, you're right. Like you know, many people are using your product because you can see like certain stats, but you don't know who. who they are,
Yeah.
right? Like
Yeah.
open source works without any barriers to adoption. So we needed to surface them in the first place. We refer
Hmm.
to it as like community surfacing, and there were
Hmm.
multiple different things. The highest quality yielded our contact us form on the website, which we would place everywhere. Like, hey, if you want to talk to us, this is how to get in touch.
Hmm.
And then we would also host events, physical in the first days, where we would do like meetup kind of events in different areas where we had a lot of customers. We would then go there and speak to people, get to know people. We would take their registrations, thereby collecting also the contact data, and then we could follow up. Later on, we also did a lot of digital events, and we would also publish certain content that was gated behind forms. And they're like, hey, if you want to read about this, you need to leave your contact data. And then we would humbly position the enterprise edition and ask them like, hey, are you interested in this, yes or no? And that's how we would get in touch. And then we would qualify against like, okay, are you aware there's a free edition? Why would the enterprise edition be interesting for you? What is your reason for looking into the technology in the first place? Is it because you like to play around, or is it part of an IT project that your organization is running? If so, why are they running it, and so on, right? You try to get at the reason for them getting in touch. And what you wanted to find is like, hey, I'm doing this on behalf of an organization that is committed to solve a problem,
Yeah.
and you are part of the list of the alternatives.
Yeah.
So in my pipeline criteria, having competition was a plus, not a
Yeah.
minus.
Yeah.
If they were also looking at alternatives, it was a strong sign for us that they were committed to eventually make a move and make a decision.
Yeah. Yeah. I mean, I think it's a classical idea of how much intent is there, and you can measure it by understanding the pain and the in the end also the economic impact of solving that pain, right? And where they are. I assume that like most open source companies are adopted by developers, and you mentioned this also initially. How do you then get path to power, right? Was the pain the main criteria to understand, okay, if there is that specific pain, then we also get access to the right stakeholders, develop champions, and then sell the solution? Yeah, what were some of the learnings there?
Yeah, that's it was typically a bottoms up journey, as you say, right? You start at the
Hmm.
user. Software developers, they are not irrelevant, they're important. Their opinion matters more and more, but
Hmm.
of course they are not deciding on budget and these things. So you needed to understand why you are talking to them. Is it because they tried out a new piece of technology on a Saturday afternoon just for fun, or is it, as I just said, right, on behalf of something that's going on in the company?
Hmm.
And then you you basically worked yourself up, right? If they asked you for a price, that you would ask like, yeah, okay, who's asking? That's complex. We need to understand certain characteristics, and then you say like, I give you an example. We need to scope your license to a particular use case or project. Who can help
Hmm.
us do that? Do you know that? No, I don't actually know perfectly well. It's that was more like a business perspective scope. So yeah, can you introduce me to someone who knows? Or your enterprise architecture team has certain questions that go beyond the pure API, but more like towards the long-term maintainability. Yeah, we can get them in touch. And we would also do things like an on-site POC, for example, building a
Hmm.
runnable prototype within a certain time span. And then at the end, we would also motivate them to invite the decision makers, for example. And to
Hmm.
be honest, that wasn't the CXO level, right? It was
Hmm.
mid-level IT management, but they did have enough budget authority to basically being able to afford us for a specific project. But it also meant that we follow the land and expand strategy,
Hmm.
right?
Hmm.
I mean, we were not a commodity product, but still the amount you landed with was much smaller than what you could eventually get to.
Mhm. Yeah, yeah. I think it's a fantastic motion, and obviously something that allows you to essentially get the attention, almost like have a paid POC and then level up over time, right? And POC still six figures here in the enterprise. But I mean, usually you need to get to actually, time spent with you to, okay, there's a strategic initiative, we can solve this, to then essentially, build a strategic partnership over time where you, not just help on one specific workflow, but maybe multiple, and really, are deeply entrenched in the, IT infrastructure of the company. I want to switch gears a bit. Like, so let's assume, we opened the opportunity, there's a strategic initiative. Given the sales cycles, like, what do you think is the most important step in the entire sales process to close a deal, right? Like, what was it for you guys? Yeah.
I mean, the standard answer would be discovery now, right? Like what you learn during the discovery phase helps you close a deal. I think the way we thought about it was we need to guide the customer through the journey in a way that we always give them what they need at a particular point in time. And you need to do that well through the entire journey. And you're
Mm-hmm.
only as
Mm-hmm.
good as your weakest part in doing
Mm-hmm.
so, right? If you're very poor at negotiating contracts, that's where you're going to lose your deals. So for us, it was we wanted to find a general need first. Then we would open the opportunity with a few criteria around it. Then we wanted them to get to an actual evaluation where you would say, like, at the end, we come out with a product of choice.
Mm-hmm.
This is either us or someone else, but you make that decision and we help you facilitate that. That's when our solution engineering and sales engineering team got heavily involved. Afterwards, you're not done, right, when you're dealing with a large bank, because then comes a different phase where it's less so about the product and it's more so like, yeah, you're our preferred product, but we don't know if we can get to terms with you on all the other stuff that we need to resolve, like pricing, security, contracts, warranties, liabilities, SLAs, and whatnot. So we could spend an equal amount of time during that phase negotiating with procurement and all and legal and compliance. And then it's about closing, right? Getting people to actually sign the thing. I mean, that's a bit simpler, but not to be underestimated, right? Like, who needs to sign? Oh, well, that was the person who left the business yesterday. Not so great. That can kill a deal, even in the latest stages. So we we basically aligned our internal goals to the goals of the customers in the various different stages. I think that is key, and that makes you operate really, really strong.
So you had a really strong view on your sales process that you then essentially, made the customer follow. So starting with, kind of pain and strategic initiative, and then going through the different stages. How many stages did you have, and what were some of the kind of entry exit criteria you implemented?
So like I'm describing that now from assuming we have opened an opportunity,
Yeah, yeah.
and that
Hmm.
was a 5-stage process basically. So the first stage was about getting them to evaluate against specific criteria and all of that, right? Like we know there's a need, there is some relevant problem, not necessarily a super strategic initiative. It could also be like a specific project of importance.
Hmm.
And still, it could mean that they accept that for a little while. And that little while
Hmm.
could be a few years, right? Like, yeah, we know that's a problem and we should be solving it, but not now.
Hmm.
And then
Hmm.
they make this move and like, now we're committed to solving it. We're putting actual budget and people behind it. We can do a POC and these kind of things. That was the next stage where we would want to convince them that we are the preferred product of choice. And afterwards it was called negotiation. The
Mhm.
goal of that was like, hey, we can find agreeable terms, both commercially and non-commercially, like just contractually. And then the final stage was closing. Like we agreed on a final version, but did we manage to sign it from all sides without sneaking in stuff that we had deleted before and so on. So yeah, it was actually 4 stages. The first stage was prior to us opening the opportunity, which it was called to be qualified.
Yeah, 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 yeah. Great. And I mean, in such a business where you have long sales cycles, I mean, what kind of operating cadence did you work on specifically? Meaning, how did you run your forecast process? What were the different areas that were included, like deal reviews or pipeline reviews? Like, how was that set up at Camunda?
Yeah, that's a great question, because you define things like how they should work, and then
Hmm.
you, like, at the end it was 170 people in my organization alone, right? The company was much bigger at the time, so you cannot naturally expect everything to follow the textbook rules, right? Not because people sabotage you, but people are not aware, or people understand it differently. You made a mistake while defining them. We had actually quite a few cadences to monitor the important bits of our engine. So, for example, on a weekly basis, we would check every opportunity that was opened against the criteria. And while that was on the sales managers primarily who did that, we also did that from a RevOps perspective, basically double checking what people had put into Salesforce and why that would actually align to our criteria. So that was almost a daily thing on like
So,
to,
so just for me to get that right, so you basically every opportunity that was open was checked by the manager against certain criteria and double checked by RevOps against that criteria.
yes,
Why do you think is that so important?
because it that was the basis of our longer term forecasting. I could rely on very consistent conversion or close rates for these opportunities. I knew if we opened 100 opportunities, we would close a certain amount of them. And in times, like, there were times when we became sloppy, and obviously the pressure was on for the pipeline, so there was a short-term incentive to just open stuff to make it look good. And like, yeah,
Of course.
and again, not because of negative intentions, right? Or you're bringing in new people, new AEs to the business, and they want to create their pipeline, they want to fill their pipe, and they rather take too much than too little. So you need to guide people in the way that you want the business to run. And we were hiring a lot of people, we were growing and pushing the limits on pipeline creation. So it was important to maintain a strong eye on the consistency of the quality of that pipeline. And that was basically the motivation behind it.
Okay, so you're really good at looking at what gets into the pipeline. How did you look at what is already in the pipeline and what was the cadence there?
Yeah, I think this, like, equally important was the weekly sales forecast call. And that was about, like,
Hmm.
what are we going to close this quarter? What are we
Hmm.
going to close this month, this week? And also, like, towards the end of a quarter, we would already start to, like, look into, like, what are we going to close next quarter. That was basically a very classical roll up, more based on a deal per deal rather than like a probability kind of a view. What was in and out, we had different categories there: commit, upside, and so on. Not unheard of, I would say. Nothing special, not trying to reinvent the wheel, but then yeah, doing that really with diligence, having week over week changes. Well, last week this was all committed, and now where is it? Like, why did it change? What did we learn? So we
Hmm.
had this. We had a monthly lost review where we looked at lost deals and tried to learn from them, mainly with the sales managers. We also had a renewals forecast. We haven't so much talked about that, but since you mentioned the cadence, that was also weekly, and then we also had a monthly pipeline forecast, like separating like pipeline generation from like closing the pipeline we have. I was a big fan of not mixing up these two discussions because that would typically lead to unfocused discussions. So it was either about how do we close what we have, or how do we go about the fact that it's not enough and we need more pipeline.
Yeah, yeah, yeah. And also breaking out the new logo versus renewal. It's very different cadence, very different people
Yeah,
generally.
that were
Yeah,
two different
yeah,
forecasts. And I think the
yeah,
last forecast I've added was a hiring forecast, because people would naturally then like focus on the outcome and the results, and they would like, yeah, deprioritize like building for tomorrow. And that typically means you need to bring in the people that you have on your hiring plan, and if you bring them in too late, they cannot help you produce the results of tomorrow, when you need them.
yeah, yeah. And I assume, so you mentioned that you did a deal by deal forecast. Where was every rep asked to submit forecast calls, or was it mostly the managers that reviewed the pipeline and then submitted the forecast calls?
Well, it was a roll up, right? Like, let's assume
Yep.
I'm a team lead. I do my own forecast with my team, same standards, but not everyone attends that. And then I go into the bigger forecast and I bring my team's number and I bring it to my manager, who then brings it to the CRO and the CEO, so to say. So
Yeah.
it would roll up, but the weekly sales forecast I was referring to was basically happening on all levels, you can say.
Yeah, yeah, yeah. Okay, okay. So every level had their own kind of meetings around it. Everyone had to submit a specific number every
Yes.
week, and then you have track change, and that ideally do it on a deal by deal basis. To also factor in kind of swing deals, I assume that often happen in enterprise and can completely derail your forecast. Um, and what would you say are like the biggest learnings when you think about like predictability? Yeah.
Um, I think you need to make it a priority in itself. I think that's like, don't just talk about it, but lead by example, and measure predictability and celebrate when you're doing it well. So we had a clearly defined process for forecast accuracy. Like, we would take the fourth forecast of a quarter, like week 4.
Hmm.
Everyone got logged in. We put it onto a Confluence page, and towards the end, we wouldn't punish publicly the people who got it wrong. There's multiple reasons for that, right? But we would
Hmm.
celebrate the teams and people who got it right. And everyone, it was kind of a friendly competition, including finance submitting a number, and so that showed the importance of it. That was more for the in quarter forecast. When it came to like year over year forecast, right? Like, sometime in Q3, you need to come up with your sales number for the next year. That wasn't the way how we did it. We went more about like, okay, what's year over year developments? How does that relate to pipeline developments? Yeah, how does that relate to CEOs or boards' ambitions for the business? And we would still get a pretty accurate number there. It was with a margin of error of 10% from a year over year perspective.
Yeah, yeah, yeah. I mean, I think the annual planning is another big topic. We could probably spend another
Yeah.
hour on. Also, really, really important. In terms of sales metrics, I'm curious. Like, what did you look at every week? What was important to you to run the business?
Um, I would say first you need to look at what do you close and how does it compare to your plan. It's so
Yeah.
basic, but it does get overlooked with all the other stuff you can look at for very legitimate reasons. But this is still the holy grail.
Hmm.
If um, if that doesn't work, that's also like where you need to focus right away. So
Hmm.
that was number one. How did our sales develop? And I was never indifferent about like, can we close the deal this week or next week? Doesn't matter. Yes, it matters. Like,
Hmm.
it mattered a lot to me, because if you close it week, you could close another one next week. And then we looked at new opportunities being created, right? How many did we get over the line, get accepted through these criteria and all that diligence machine? That was quite important. Then we would have, of course, like a weighted pipeline kind of a thing. Like how does that develop? How much of pipeline do we have in which stage? And then I was big on monitoring the close rate of cohorts. So we would always take quarterly cohorts of pipeline, and we had to travel back a year in time for that, right? But not filtering by close dates in Salesforce terms, but filtering by creation date, and say like how much of that pipeline did we close? And sometimes we had quarters where we said like, oh, normally we close 20%, but this one is ailing at below 10. What's wrong there? Are we going to make up? Are some deals stuck, or did we get sloppy in the way we created pipeline in that quarter? And are we making sure we're not repeating this?
And could you see any correlations between, let's say, oh, we're hiring a lot and suddenly close rate goes down in terms of the cohorts, or I don't know, I mean, seasonality, or I don't know, yeah, like anything you could find out? I mean, I think it's a super interesting approach.
So obviously, younger cohorts would show a lower close rate or conversion rate,
Yeah.
simply due to the sales cycle and the variance in it. Then yes, like it made us adjust the criteria and also adjust the focus. So sometimes, let's take an example. You have a market like India. There's tons of developers. It's not a high GDP and so on. So we would open a fair amount of opportunities for India, but they wouldn't convert. Why so? Because our value proposition of the enterprise edition wasn't as attractive in that market. So that led to us raising the bar for opportunities being created in the first place from such geos. And we would also find like that very large enterprises, they would convert, but it simply took even longer than the other ones. So like above 50,000 employees or so on. So not a concern per se, but we need another 2 quarters of patience on them, for example. Yeah. And
Yeah, I
yes,
love this
of
so.
course, when we hired a lot, yes, you would see like that the close rates weren't as good in the beginning as they became over time. Yes, that was also true.
Yeah, yeah. Yeah, I love this so much because it's a very metrics driven approach to managing, right? And I think what that defines for me is that you basically look at the hard data and then you try to understand why that actually happens, right? And you dig deeper to have a conclusion, instead of having like a preemptive like idea and solution in mind, but you really start with, okay, this is the reality, let's understand the reality, and then let's think about what we can do to change it. And this simple thing of it sounds very simple, but it's actually not, right? Like, okay, we have to change the criteria of opening an opportunity, then has a big impact on your whole funnel metrics, right? And I think this is also my main takeaway here is like being really diligent on opening an opportunity, and then being diligent about the entry and exit criteria per stage, so that you actually can compare apples to apples. Because I think in most sales pipelines, the reality is that that isn't managed very well. And then you look at your close rate or your cohorts, and they're all over the place. And it's just because you just really don't know. You basically you can't trust the data, and hence you can't really make good decisioning on the management side.
Yes, I think that was what you just described was at the back of my approach. Also probably influenced because I haven't gone through a classical sales career. So what did I know about all of that? So I said we're gonna make database decisions. I think what is crucial, you need patience to build up a strong data foundation, and you also need simplicity in how you set things up. There's no point setting up a, I don't know, 20-stage sales process that you change every other year if you can't manage consistently through it. So we try to keep it simple as good as possible, sometimes succeeded better than other times, and then that gave us this good foundation that we could then leverage over time.
Fantastic. Maybe, final closing question. I mean, I think we could go on into hiring, we could go on into annual planning, but in the interest of time, I think this is a fantastic rounded package already. Like you spent around like 5 years as a CRO, right? Like before moving into the CRO role. And if you think back now, like what were like some major learnings or things you would do differently in that role? Anything that stands out?
Yes, I think the first thing I would say, and it's something I'm saying to the clients I'm advising these days, it's very easy to buy into the classical go-to-market playbook of a SaaS company, right? Like you define a sales target, you derive the number of sales resources you need, maybe pair them with pipeline generation resources. You hire a lot of people, and that keeps you busy. And then it takes a year or two, and you realize that things are not working as you thought they would
Mm-hmm.
work. And that there were areas where that happened to us as well. And the learning I took from that was you should prove before you scale. Like if you transform from, I don't know, having 5 sellers, try to get to 10 and don't jump to, I don't know, 25 right away. Because what that does is you're busy a year building up these resources, and you're not making sure that they are actually successful in their roles. And then you're not doing your company justice, but you're also not doing the people justice, right? And then you read the news about like a reduction in force here and so on. And I think that's a manager's responsibility to prevent that from happening. And that's why I would say whenever you try something new, you break out of your current approach, make sure you can prove, take some risks, right? But it's enough risk to do it with 5 people. You don't need to do it with 10 or 20 additional people right away. I think that is a big learning. And another one is, if you want a second one, is I think if you're very good at inbound demand generation, it doesn't translate into outbound because you're meeting the customer at a completely different stage in their journey. And you don't have any experience in offering something valuable at that early stage, right? You're good, like we were good at receiving customers who were ready to implement, had already played around with the product. We love it, we want it, we already decided for you, give us a price, and so on. The playbooks you develop for that are fundamentally different when, like, basically meeting someone who has never looked at your solution, who isn't even aware of the problems you're solving, who maybe even realized having these problems in their organization. So that's another key to throw out.
Robert, thank you so much for joining. I think this was fantastic. So many valuable learnings. I hope we can have you back one day. Thank you so much.
Yeah, it was a pleasure. Thanks for having me, Janis, and all the good questions and for guiding us through the session.
Awesome. Have a great day. Bye.
You too. Bye bye.